What's up, guys, and welcome back to my YouTube channel. So I'm here once again with another insightful video, and today I wanted to do something different. But after posting these trades that you see on your screens on my social media handles, a lot of you expressed interest in knowing how I arrived at all these beautiful and insane trades, and that is what I am here to do. So I will be breaking these trades down from the top right to the entry, and also show their corresponding MT4 screenshots so that you won't think that I'm making things up, right? So you might want to stick around to the end because it contains a lot of stuff, right? And before we delve onto the chat, please do well to hit that subscribe button and turn on post notifications. Also, leave a like and a comment in the comment section just to help boost my channel for others to also see and learn. Okay, so quickly, let us jump onto the charts and dissect and bisect all these beautiful trades that you are seeing on the screen. Okay, so welcome back to the chat, guys. So for the purpose of you seeing whatever I saw before these trades played out, I'm going to re-engineer price back to the start of the Frankfurt session. Okay, and just for you to know, all of these trades that you see were not caught by luck or chance. Okay, these were trades that were based off rules, right? They were taken based on rules and systems. Okay, and that's what I'm here to share with you. Okay, so real quick, like I said, I'll be starting from the higher time frame, and mostly my intraday higher time frame is the H4, right? And I'm going to start from that. So let us start from the H4 time frame. Now, right in here on H4, if you watch my video on how do you call it, the breakdown, which I shared last Sunday, right, you realize that I was saying that if price gets into this level of supply in here, right, probably we can have price respecting it and then moving all the way to the downside. If not, we'll have a break of structure and then price will get into some level of supply of the daily, right? And that is exactly what has happened. Okay, so clearly we can see that H4 is making what, higher highs and higher lows, and this was my recent higher low that made this higher high. So I'm working within this H4 swing leg, right? And just as you see on the screen, I have already defined that H4 demand zone. Okay, so that's the first step. Always need to identify the higher time frame direction. So we've identified that. So H4 break of structure, demand zone clearly defined. Now on a normal day, when you see price making higher highs and higher lows like this, what can you anticipate? You can anticipate that there will be what, a pullback, right? So most of the times, notice my choice of words. I didn't say all the time. Most of the times, you are going to see what, a pullback or a retracement before the continuation to the upside, right? And always I tell you that before you can anticipate a pullback, you need to see the intraday time frames showing you that. Okay, and so real quick, I'm going to step into M15 and let's see if M15 really told us that it wants to make that retracement of that H4 leg, right? So real quick, M15, and let me quickly touch on what is happening here on M15. Okay, so here on M15, this was basically the last low of M15 that made the high. Okay, now everything you're seeing in here is complex pullback, because if I should take my real line tool, you're going to realize that when price retraced, it didn't take this low out, right? And so this last point of M15 demand was still respected. Okay, now let me play price forward and let's see what price does. Okay, so playing price forward, we can see that this low, right, had pulled up and taken out this high over here. So we've had that M15 break of structure to the upside, right, in here. Okay, so this is the break of structure to the upside, M15, and because this leg made this break of structure, or took out this high, this is going to be your new M15 last point of demand, right? And so let me clear this real line too, and we can see that when price came back down, right, it took out this low in here. Okay, so this will be what I call a change of intent, because right now M15 has switched from a bullish one to a bearish one. And this is what I was talking about. Always wait for the intraday time frames to tell you that it wants to begin that retracement. So real quick, we've seen M15 make that retracement. Now, another thing, after this change of intent, what can we do? We can look for our supply zones, right? So on a normal day, you're going to mark this as your supply zone on M15. However, I'm going to show you something when we get to the 5 minutes. Okay, the reason why price didn't get into the supply zone, I'm going to show you when we get into the 5 minutes. But then another thing is, after a break of structure, we can take advantage of counter trend trades, just like we are doing on the higher time frame, right? We are taking advantage of this counter trend moves to the H4 demand. The same way we've had this break of structure, we can get into M1 and look for what counter trend trades to these levels before we can sell back, right? But like I said, on the 5 minute, there is something that I want to show you. So let me show you real quick before we do the first trade. So this is something that I have realized or I have seen throughout the years of backtesting, right? This straight break of structure in here, okay, we can see how price, was making like higher highs and higher lows, right? And then we had this straight break of structure taking out this one in here, and then also moving on to take out this M15 structure point, right? And you might see something like a heading supply zone in here, right? Anytime I see this kind of stuff, right, I know that instead of like marking this order block, I'll rather what choose this whole range in here, because I see this as a range, right? So this will be my supply range that actually led to the break of structure of the M15. So I'm going to mark it like this. So that is the reason why the price did not what come into the order block that we had up here, right? So you can backtest it, okay, because I'm going to show you another example on the 1 minute time frame so that I just decided to share this with you so that you can get some good information that you can also backtest and find out if it works for you. You go for it. If not, you can do whatever you want to do with it, okay? So this is the range, and I began to look for trades in here on the 1 minute time frame. So real quick, let us step into 1 minute time frame, and that is when I'll get my first trade, right? The buys to the upside. So on a normal day, what do you think smart money traders are doing? Okay, another trap in here, and I'm going to touch on it very briefly. So smart money traders have seen price making lower highs and lower lows like this, and so they are looking at this point of supply in here to take their sales, right? But then I understand that it is a trap, and the reason why it is a trap is because we have a range right above this point of what supply, and you will see how beautiful that price gave every confirmation to smart money traders to take this trade. Okay, so smart money traders will see this push to the downside. You have this level of what supply, right? And they'll wait for confirmations. Even some of them will see this as like a flip, right? And they'll be looking forward to enter right in here. And you can see that if they entered in here, price will just what take them out. And those smart money traders who were also smart to spot the imbalance in here and use it as a confluence to enter the sales. Probably they might think that after the entry, they are what in the trade and price is just hovering around their entry, right? And they are hoping that price will tank to the downside for the sales. But I understand that it is a trap, right? So when you're looking for sales, I'm looking for buys, just because I understand that there is a range right above my head. So what am I seeing in here? So in here, I saw this push to the upside, making what higher highs and higher lows. However, I understand that this whole push is one swing leg. This is liquidity, and price has come down to grab all these levels of liquidity, right? And what am I waiting for? I'm waiting for price to give me a very beautiful confirmation that is taking out this high in here. Then I can go for my trades. Okay, so real quick, we can see how price takes out this high after grabbing all this liquidity and tapping into this demand zone. That's my first trade. Okay, so my entry was right in here like this. My entry was right in here. This was the block that I was looking at, and my stop loss was right below this. I think it was like 4 pips or something, and my target was 5R into the range like this. Okay, so 5R into the range real quick. So like I said earlier, you know, some smart money traders are selling, but let's see what price does. So price quickly, you can see it hits my TP nicely, and I'm done with my first trade. Now again, like I said from the beginning, this is a range, right? And anytime I see a range, I understand that price may not necessarily get into that other block, right? We can have price tap into the range, and then real quick we can look for confirmations to the downside. Okay, so first thing that I saw in here was this. Initially I thought it was like a confirmation, but after zooming in I realized that it was just equal lows, right? And so I had to wait for price to give me further confirmations. Okay, so with the first buy, I'm going to display the screenshot on the left side of the screen, right? So yeah, so I just wanted to wait for price to give me that confirmation to look for the sells to the downside. Why? Because M15 is bearish. Always we are flowing with structure. M15 is bearish. This is the target liquidity that we are looking forward to get to, right? Of M15. And so I need to get a good confirmation before I can sell. So let me play price forward. So playing price forward, I can see that price built what some sort of like equal highs within the range, right? And let me continue to play price forward. And real quick, what do we see? We see that these equal highs were taken out, right? So we have equal highs built, liquidity grabbed, a push to the downside, confirmation right in here, sign of bearishness. And if you remember what I said about the range, the same thing is happening in here. So personally, I think I missed out on this one. I missed out on this trade, and my entry was right in here like this. And I missed out on it. Like I said, I missed out on this trade. And the reason why I missed out on this trade is I also failed to see the range that the M1 has built. Look at that. What is the difference between this price action that you are seeing in here and the one that I showed you on M5? What is the difference? Look at this. What is the difference? You can back test it. You can go and back test that. Okay, so yeah, so if I had paid attention, probably I could have caught this trade with the range like this, because with the range I would have had that tapping nicely. Okay, and price would have just tanked to the downside. But like I said, I missed this trade, and I'm going to leave it at wherever it was. But then my target was to at least this 15-minute low, right? So that was my second trade that I missed out on. Let me continue to play price forward, and let's see what price did. So real quick, we had another M15 break of structure. Okay, so M15 has broken another structure to the downside, right? So let me show that real quick. M15 break of structure. M15, great. So real quick, I'm going to step into M15 and mark my supply zones. Okay, so yeah, so we are done with the top one. So let me just clear this one and let's focus on whatever is here. So in here, the supply zones I had one was here, right? And the second one was here. Okay, I'm gonna refine them on the 5 minute. So refining on the 5 minute, I can say that I will limit this one to just this other block at the extreme, right? So this was the start of the whole 15-minute swing leg, and this was actually the candle that instigated the break of structure of this last point of 15-minute demand, or this last point of 15-minute structure, sorry, target liquidity. So again, we've had another break of structure. What did I say about if price breaks structure? We need to wait for lower time frames to tell us that it wants to retrace. So instead of sitting down and waiting for the retracement, why not ride along, right? And that is where my third trade comes in with the buys. Okay, so just like this same scenario, right? We had a push to the downside breaking structure. We ride along to certain levels, we sell, right? Another push to the downside. We are looking for a retracement. We ride along and then we sell. So that is a whole game. Like, it's not I'm not going to say it's easy, but these are simple stuff. Simple does not mean easy. You need to spend a lot of time back testing. Okay, so real quick, let me step into 1 minute time frame and let's see what price was doing. Great. So stepping into 1 minute time frame, we can see what price did right in here. This was the last high of the 1 minute that created this low, right? And we can see this high taken out. On a normal day, people will call this a flip because this supply zone was supposed to make a push to the downside and it failed, and then rather led to a break of structure, and you'll be looking forward to enter in here, right? They are not wrong, they are right. But then you always need to understand market structure. There is this basic framework of structure build up that I use, and I have not shared this before, but then I'm going to share it today. So always, maybe you have seen it, but you've not paid attention to it, or you've not taken it into consideration. Always, price need to make what? A three-wave move to complete a structure. Okay, and it is this basic three-wave move that builds up market structure. What do I mean by that? If we see something like this, right, they are made up of 1, 2, 3, right? Again, like that, 1, 2, like that. Okay, so you see price making higher highs and higher lows. So that is a three basic framework that I use. And then I understand that this is just one leg, but then I'll need to have price come down for the second time. So this becomes the second wave. And always my second wave is where I look for my counter trend trade. And my third wave is what I ride along with pro trend. Okay. So what you are seeing in here is just this one. So this is just the first wave, right? And I will need to wait for the second wave, right? And because this is 1 minute, I can't take advantage of the counter trend, right? However, after the second wave is completed, I am aware that I am going to ride on the third wave into this level of supply, right? And that is exactly what I did, right? So if you entered in here, there is a higher tendency that price will come back on the second wave to take you out. And what are the confluences? First off, we have this order block right in here, right? And I think by now you should understand why I'm choosing that particular candle as my order block, right? First off, these two candles that you see in here didn't have their wicks engulfed by the bodies of the next candle, right? Apart from that, another thing that I saw in here was what? An imbalance, right? An imbalance right in here, and all of these added up to give me that confidence to set my limit. Already we've had M1 break structure giving me that confirmation, so I just set my limit in here, and my stop loss was right below. I think it was like 7 pips, right? You always need to give price room to breathe. Okay, so 7 pips, and my target was into this range for 7R. Real quick, and this was it. Okay, again, I understand that this is liquidity. Okay, so I mean, as simple as that. Nothing humdious, right? Just constant backtesting will reveal a lot of these things to you. So what do we have? Price making lower highs and lower lows. That is break of structure. We've had M1 what confirm that it wants to make the retracement. We've had liquidity built, imbalance, point of interest. We set our limit. We are ready to ride on the counter trend. Let me play price and let's see what price did. So fast forward, we can see price comes in, taps into our entry. Okay, and let's move on. So it comes back the second time, but I'm not afraid because my stop loss is there. Moreover, this is a risk we are taking. Okay, so yeah. And then fast forward, our TP is hit for the buys, right? And this is the third trade. You can see simple stuff. But then we've not forgotten that we are bearish, right? And so this was just a counter trend move. The main trade was to sell to at least this lows. So now we've gotten into our supply zone, and we are going to wait and see how price reacts within the supply zones. Okay, so I'm also going to show the screenshots of this trade on the left side so you can see that also. So let me continue to play price forward, and let's see what the M1 did when it got into this level of supply. So getting into the supply, I saw this kind of confirmation. Probably you might have considered this as a confirmation. That is fine, but then I also understand that price may be making what a reversal. If you watch my Instagram post, I said that we will be expecting, or I'm anticipating, a New York continuation. The reason why I said a continuation was the fact that M15 was making lower highs and lower lows, right? And so after riding on the counter trend, I expect price to continue. Okay, so what do I have here? I have price and time confluence right in here. The fact that it is the New York session open. The New York session opened around 1 p.m. somewhere around here, right? And we are in within those opens. So I was expecting that continuation of the 15-minute bearish move, right? And looking at this as our confirmation, I can boldly say that there has not been any inducement. Another reason it was the fact that, if you look in here, there was imbalance, a very big imbalance in here. Okay, and price has just tapped into this one time, and this is open of New York. Expect an inducement before you look for the sells. Okay, not always though, but most of the times. So I decided to wait for price to give me that further confirmation. Okay, so real quick, what do I see? I see this high taken out like this, and after this I knew that I just need to wait for price to give me that breakout structure, and I can just take my entry or my sales on the retracement to the downside. But let's see what price did. So playing price forward, I can see that price has taken out this lows, right? And I was waiting for price to come back into these levels for the sales, but price never did. Okay, but I saw something different, and I'll show you real quick. So right in here, after this break of structure and price refusing to come back, I understand that we've created two legs right in here. Okay, so now instead of waiting for price to come into this higher one, I will just wait and see how price reacts off this second leg. This is a second leg, so I'll be working within this leg. Okay, now on a normal day, I would have had my limit right in here like this, and my stop loss will be right above here, and then I'll be looking forward to take my sell to the downside. But I decided to wait. Why? Look in here, and you're gonna see liquidity built to the upside. Okay, and I just decided to wait and see how price will react. If price takes out this liquidity, fine. Already I've seen a liquidity grab in here, and so I wasn't expecting another liquidity grab. But because I don't control price, I just had to wait and respect that. Okay, so let me continue to play price forward, and let me show you what I saw. So real quick, I saw liquidity building up right below this point of interest that I was looking at, right? But then I also still decided to wait for further confirmations. So let me clearly define the supply zone in here, and let's see how price will react of that supply zone. So real quick, price comes into the supply zone, right? Taps into it. This liquidity that you see right below the point of interest was taken, and after that we had this beautiful confirmation, and that is when I decided to set my limit right on this candle like this. My stop loss right above, I think it was like 5R or 5 pips, right? And my target was to the downside. Okay, remember we are going into that H4 demand. However, you don't need to be greedy. Okay, so at least take some volume off at structural point, relevant structural points. However, I know that price has a tendency to get into this demand zone. Okay, so I took partials at these lows, and let me play price forward, and let's see what price did. So this was my I think fourth trade, right? Great. So let me play price, and real quick we get tapped into the trade. Okay, and there was another scaling entry opportunity, and I'm going to share that with you also. So how did I get a scaling, right? Let me switch back to the M5, and right now we know M15 is bearish and we are making the retracement. However, we can see that M5 is also making lower highs and lower lows, right? We can see that this one has been mitigated right in here, right? However, this one has not been mitigated yet. So probably you might think that this candle mitigated this, but because I understand that I need a three wave move, I can expect price to come back like this, be forward, making the move to the downside, and that's what I did. So quickly, let me mark my supply. So this is my supply defined, and now I'll step into 1 minute to see what price does when it gets into this level. So playing price forward. So real quick, price comes into this level of what, 5 minute supply. What do we see? Liquidity built up, right? Liquidity grabbed, price taps into the extreme, right? But then I didn't get my ideal break of structure confirmation. This was a follow through break of structure. Okay, so let me play price forward and let me show you what I saw. So real quick, I saw this 1, 2, 3 move, right? And I just knew that I was good to go. If you watch my video on the entry models, I think you should see this already, right? So my entry was here, and personally I have rules with regards to my stop loss. Initially I was doing 1 pip stop loss and 1.5, but price was messing me up, and so I told myself that henceforth I'm going to be doing just minimum 2 pip stop loss. So if I take a trade and the trade is like 1 pip stop loss, I take it to 2, right? And my target wouldn't be to this 5 minute low, no, because I understand that M15 is bearish, and so at least to this M15 lows, right? That is 20R, right? And then further into this demand zones in here, right, which is around 30, yeah, 34. And let me play price forward and let's see what price did. So you can see price just tank to the downside, and real quick I took partials in here at the 15-minute low, right? So with this trade, this 30 hour trade, I took like 80% of my volume, and with this I took 50%, and I just allowed the rest to flow. However, this morning I woke up and I realized that I had hit break even on the volumes that I left, but a good trade was presented this morning, and yeah, it's all nice and beautiful. So yeah, I hope you've learned a lot from this, right? So this is the trade that I am in this morning, looking forward to continue the ride to the downside. However, I won't be touching on this trade. So these were all the trades that I took yesterday, and I hope you found value in it. Please do well to backtest these things. This concept that I teach, that is all what I want from you. Backtest them. Please backtest them. Backtesting will give you a lot of confidence to take this kind of trade. So let me quickly end this and see you in another video.